Everyone, we're going to look at commodities here, the dollar, gold, the miners, oil, and natural gas. We're going to start on longer term time frames and the monthly time frame for dollar and gold because I believe that's where we have the most clarity, and it means we have to be more patient for those patterns to break. But when they do break, we're going to be looking for longer term follow through, certainly more so than we would on daily chart patterns. So what I'm looking at on the dollar monthly is a range that we've been within for essentially 5.5 months essentially. And it's the resistance of 97.69 where we double topped. It's actually 97.71. We had multiple tops at 97.71 and our support is down at 95.03. So for the monthly uptrend to remain intact, we have to hold 95.03. Otherwise, it's a triple top and then a loss of support, which would mean more significant consolidation. So we can see we hit a double top, we pulled back, established a higher low, rejected from resistance yet again, and here we are sitting right in the middle of this channel. We're about $1.20 from resistance and about $1.50 above support. So it actually still slightly favors the bulls with where we stand comparative to that range. But as you can see, the weekly uptrend was lost on this previous week. That being said, the bulls significantly bought that dip, so it's not that meaningful. We only broke it by 8 cents before the bulls bought. So a little bit choppy. There was the reaction to the FOMC, obviously, that had the dollar drop in the first place. But I am patiently waiting for this longer term signal on this monthly pattern to play out. Because of where gold stands, this is going to be very important to me. So gold is trying to give us a cup and handle pattern where we have resistance, the consolidation is the cup, the inability to break resistance, healthy consolidation to form a handle, and then the breakout here would be a bull break of 1346, 1366, and 1375, and that would put us in the clear to a certain degree, a couple more levels to clear, but in the clear for some significant monthly reversal. We had the significant pullback in 2012 to 2015, solid bounce, and now it's just been a tightening range ever since. If the dollar breaks that monthly pattern bullish, I would anticipate gold to fade back a little bit and see this monthly pattern continue to tighten up for potentially the rest of 2019. If the dollar breaks bearish and gold bulls can keep in control, again, we could be looking at a significant gold breakout. There's a lot of factors. What is the S&P 500 going to be doing? Are we going to see weakness in the overall markets that gives a little bit of boost to the gold bulls based on the inverse correlation? Or is the market going to stay strong? Again, so I'm watching the market, the dollar, and gold all in relation to each other on the monthly time frame. Weekly chart for gold, if we set a lower high compared to 1346, we're going to be looking at a weekly equilibrium forming. And based on the size of the move that the gold bulls saw on that dollar weakness and on the FOMC reaction, I would anticipate that we are more likely than not to stay in this weekly tightening range into March, or I should say through March into April and potentially beyond. So if we lose the daily uptrend with an inability to break 1346, a weekly equilibrium will form. The daily chart has a support level at 13, or make that 1298, and another one at 1292. So if we were to lose the daily uptrend, that tells us the weekly lower high has likely been set, and we would look for the tightening range on the weekly to take place. So I believe April is going to give us a lot of clarity on these longer term patterns. The bull miners for gold here, we have tightening weekly ranges here as well. So we have the high of the top of the move that we saw, low of consolidation, and the question is, have we formed a lower high and are we going to stay in this tightening range? The daily chart has been a bit choppy where we have high, low, lower high, higher low. So I like it better for clarity on the daily chart. We're heading up towards this resistance, and if we break that resistance level, we'll be testing the recent high for the senior miners. This was a head and shoulders pattern that did not end up playing out because we never came down and broke the neckline of support. Checking the junior miners daily time frame, little bit different. So the daily resistance of 33.18 we did break on Thursday, and you can see just comparing to the senior miners, it was a harder resistance level to hurdle over for the bulls because it was a more significant bounce and it was more follow through, whereas less follow through for the junior miners, so easier to see continuation. So essentially what I'm waiting for on these miners is clarity in gold. So we could see, short-term breaks of the minor ranges without seeing a break of the gold range, but I don't think we're going to get any meaningful follow-through on these miners until we get the clarity we're looking for on both the dollar and gold longer-term charts. So this is the kind of setup that I have on my back burner, and I'm looking at, a couple times a week and just monitoring, because as we know, there's hype markets, and hype markets come and go, and gold and bull miners were in hype markets absolutely back in this move from start of 2016 all the way to through the late summer of that year. And there were huge gains to be had. We saw multiple hundreds of percent on the bull miners. We saw gold make a massive move. So now we've been consolidating for years since that has happened. And the question is, are we going to get another breakout, and are commodities going to see attention again? And when that opportunity and volatility comes, volume and traders come with it. And we saw that just with our chat room in the Chart Guys, community. We had commodities all over the place in terms of people, significant activity in that chat room that we have designated for commodities. And since then, it has dropped off massively. So we're going to be looking for an influx again once these monthly longer term ranges break. And that's the way market goes. It's the same thing for the marijuana sector. We have significant hype, and then it fades for half a year, and then the hype comes back. So certainly keeping an eye long term. Oil on the monthly time frame. So just generally speaking, we are looking for a monthly lower high to form compared to 76.88. We had the high, the low of the dump in the end of 2018, and now we're looking for the lower high to be formed. The monthly lower high will form when we lose the weekly uptrend. Last weekly high or low is 54.50. So the bulls have space to work with. We're currently about 8% above that support level. We did start to see some weakness in gold at the end of this week, but it's not significant at this point. We're still in a daily uptrend. We're in a weekly uptrend. So there's no sign that the monthly lower high has been set yet. That being said, it is what we are watching for. Lose the daily uptrend and we zoom out to the weekly. And then if we lose the weekly uptrend, our monthly lower high will be set, and we'll look to pull back and for the bulls to attempt a higher low, perhaps around the $50 area, for that monthly chart to continue tightening up. So if that plays out, the S&P 500 will more likely be in an equilibrium on the monthly time frame as well. So we're watching oil for that potential correlation. But the most important level for me is 54.50, just like the S&P 500. Most important level for me is the weekly low down in the 272 range, which lined up right at about the same time. So overall, bulls still healthy on oil, consolidation to end the week, but we have to see losses of the weekly uptrend for that longer term monthly lower high to be set. Natural gas saw weakness. This is the monthly chart for natural gas. We can see the bounce has not even started yet. 4 months in a row of lower highs. The weekly time frame, we have the low of the pullback at 257. We have the high of the bounce at 2889, which ended up being a triple top. And now we're pulling back to try and form a higher low compared to 2571. If that support level breaks, we have just a weekly lower high and lower low, continuing the downtrend, favoring those bears. And if 2571 can hold, then we'll have a tightening weekly range, and the bulls will have to turn around and break the triple top in the 290 area to change that longer term weekly trend. So the bulls attempted to do it. They had a double top, pulled back, established a new support, made their way back to resistance. There's your triple top rejection and a more convincing pullback to end the week, losing that daily little higher low pattern. So waiting for weekly clarity on natural gas. And that's the theme of these commodities. Monthly timeframes and weekly timeframes are the setups that we're watching. I don't like clarity in the short term on a day-by-day basis necessarily. That's why I'm looking longer term. And again, those longer term patterns, when they do break, usually get longer term follow through, which is why we're going to be keeping a close eye on all of it. So no plays for me in the commodity space in the immediate future, but absolutely just establishing my game plan, getting ready for that potential opportunity that's going to be coming in the commodity space, in my opinion, sometime later in 2019. I appreciate you watching. Have a great Sunday and the rest of your weekend, and we'll see you in the near future. So leaving Boulder, Colorado, heading west towards Utah, leaving the sunset in the rearview mirror. And again, just not really a whole lot of stories for this chapter, but just some more scenery as I make my way west. Again, just another incredible spot where you drive up a dirt road. You have this massive expanse in front of you with nobody around. Nobody drove up this road while I was there. You pull off to the side and you pitch your tent and you sleep there. And that's what you wake up to and that's what you go to sleep to. And it's just this magnificent, it's just hard to put into words when you're out that open by yourself in that massive space. It's great. Do it. Get to know yourself. Be comfortable by yourself. When you're comfortable by yourself and you're confident by yourself, There's nothing that can bring you down. So many fears are based on boredom or being alone or needing to be with someone, needing a partner. And if you can conquer all of that and be good to go by yourself, in my opinion, that is a significant, I don't want to say skill to have, but a significant comfortability in your life that can make a lot of potentially negative situations very positive. And there's a lot less fear. When you know you're good to go on your own, there is a lot less fear. So some more epic hikes, trails, landscapes, lakes, mountains, trees, landscape changing, entering more arid, deserty. Utah is definitely a different state in the sense that, I'd be driving around. There's some moo friends. I'd be driving around and just pull off the side of the road and filter my fresh water in Colorado. I didn't really have to plan ahead too much. But driving around in Utah, it's an arid landscape and definitely want to have a lot of water on hand because there are long stretches with lots of miles in between any sources of water. A lot of these backgrounds, expansive, they just look like paintings. It almost doesn't even look real with how far away they are. So next we will go to Dinosaur National Monument, which is on the east border of Utah. Then we'll go down to Canyonlands and Arches, and we'll do all those national parks. Those were some great ones as well. Definitely highlights of the trip. And I will see you then. Have a great rest of your day.